And for a check of this morning's business news, joining me now is Peter Switzer, founder of the Switzer Report. Peter, good morning to you. So market indexes were up again last week. When will stock buying fatigue set in?
That's a good question, Kenny. It's interesting, Nvidia has, and that's been basically driving the US stock market, chip maker Nvidia, down 10% over the last 6 days, but it is up 199% for the year. So you can see there's a bit of pullback from a real flag-bearing stock in the US. And I think a bit of buy fatigue is starting to creep in. What's also interesting, Kenny, is that the NASDAQ and the S&P 500, which is being driven by tech stocks in particular, didn't do as well as the Dow Jones and the ASX 200, our index, which of course aren't really tech-oriented indexes. So we are kind of expecting there could be a rotation out of the high-flying companies that have done really, really well because of artificial intelligence, and some other companies could play catch-up over the rest of the year. But I think that the chances of a bit of a pullback are highly likely because August, September, October are often pretty tricky months for the stock market. But once the Yanks come back from holidays, the December quarter is usually very good for stocks. And I think interest rates will be falling then, both in the US and probably later for us, maybe November or December. And that will help the stock market have a nice big finish to the end of the year.
Yeah, and also we've got those words on screen that the stock market could slip as a result of the inflation news, which could be ahead. Investors potentially getting spooked because of an acceleration potentially in inflation. So what are the big data drops that we're expecting?
Yeah, you're right, Kenny. Like, inflation is going to be critically important to what happens to interest rates. The fact that the markets have been up this year has been based on the idea that the market expects rate cuts. So if inflation doesn't come good, and we have some really big readers this week, we've got the CPI here in Australia, the monthly reading on CPI. We'd love to see a number around 0.2%. Less would be even better, but that would be an okay number for Australia. But then in America, the Federal Reserve, that's a central bank over there, of course, it looks at the PCI, the Personal Consumption Expenditure Index. They think that's the best indicator of US inflation. The last reading they got was better than expected. I guess the Americans are hoping for another one of those again. But if they don't, stock markets will not like it.
Peter Switzer, thanks so much. Have a good day.